I've pointed out in the past that most of the members of the Forbes 400, myself included, pay a lower percentage of their income to the U.S. government, counting Social Security taxes, than does the receptionist that works in their office. That was not true 30 years ago, and I don't think it's something that should be true in a rich society, but it has happened. And I just computed my 2005 return. In 2004, and I have no tax shelters. I don't have a tax advisor. I just do things, and at the end of the year I add it all up. In 2004, my rate was the lowest of the 15 or 16 people in the office, and in 2005 my rate was even lower. And that's courtesy of the US government. That's not courtesy of a lot of tax write-offs or anything of the sort. And I think it's crazy, and I don't think the American people understand it very well. And I think that if they did understand it, they should and would be quite unhappy about it. So I think that the lower incomes, median and the median, people making medium amounts of income, have not shared in the prosperity of the last decade or so in a way that's all proportional to the way the wealthy have participated in it.
The talk of the Buffett rule is all over newspapers and TV, but I believe your concept of what should happen to taxation of very high earners is different from what is now promulgated as the Buffett rule. Could you clear us up on this? This is a question from Leo Slazelman from the Kansas City metropolitan area.
Yeah, I would say this. It has gotten used in different ways. I think intentionally in some cases, because it was more fun to attack something that I hadn't said than to try to attack what I had said. Basically, the proposal is that people that make very large incomes pay a rate that is commensurate with what people think is paid by people with those incomes. I mean, I think most people believe when they look at the tax rates and all that if you're making $30 or $40 or $50 million a year, that you're probably paying tax rates in the 30% area, at least. And many people are. But the figures are such that if you look at the most recent year and you aggregate both payroll and income taxes, because they both go to the federal government on your behalf, if you take the 400 largest incomes in the United States, they average $270 million each. That's per person, $270 million each. 131 of those 400 paid tax rates that were below 15%. Now, counting payroll taxes too. In other words, they were paying at less than what the standard payroll tax was up till we've had this give back here recently, but a payroll tax was 15.3% for most of the last decade. So under the Buffett rule, we would have a minimum tax only for these very, very high earners that essentially would restore their rate to what it used to be. Back in 1992, when the average income of the top 400 was only 45 million, there were only 16 out of the 400 that were at 15% or below. But now there's 131. There's still plenty of them that are paying in the 30s. I wouldn't touch them. But I would say that when we're asking for shared sacrifice from the American public, when we're telling people that we formerly told we're given promises on Social Security and Medicare and various things, and we're telling them we're sorry, but we kind of overpromised and we're going to have to cut back a little, I would at least make sure that the people with these huge incomes get taxed at a rate that is commensurate with the way they used to be taxed not that long ago, and is commensurate also with the way that 2/3 of the people in that area get taxed at higher rates. So it's gotten butchered a little bit, but it would affect very, very, very few people. It would raise a lot of money.